So let's take a look at these markets, Christine. I'm just looking at the popular averages. Some interesting moves in today's trade. I got the Dow, Christine, now up triple digits, 315 points. The S&P 500 clawing its way back to positive territory. Look at that, we're up about 0.2%. And yes, the tech-heavy NASDAQ, all right, we're down about 0.5%, but you are well off session lows. I got Treasuries a little change. I've got gold touching the new high. By the way, yellow metal on pace for best quarterly performance in nearly 40 years. What do you make it of all, Christine? Walk us through it.
Yeah, a bit of a turnaround, right? You see the trepidation around some of these growth names, you know, specifically within tech. You mentioned the NASDAQ and NVIDIA and Meta, you know, not having a great day yet, you know, turning to some of the more staples or defensive names like Walmart, like Coca-Cola. And so a bit of a flight to safety of sorts, you know, within equities, moving away from those names that there's still a bit of uncertainty around. Obviously, earlier in the day, a lot of this trepidation was around tariff uncertainty. We've got Liberation Day coming on Wednesday. We're not really sure how to price that in. Tariff risks, clearly still, we thought it was all priced in. It's not, because even on Wednesday, while we'll get a little bit of clarity, we know there'll still be a negotiation period. So the scope of tariffs, the timing is still unclear.
Very good point, because you have Liberation Day, but we don't know exactly what Liberation Day means.
Right.
What are the specifics? What are the details? We did have some strategists last week, Christine, I'll get your thoughts on this, who were more kind of generally constructive on the market near term. And I think their point was, yes, a lot of spooky headlines are coming. But some of these strategists came on the show and said they felt like a lot of that bad news was priced in. In that you're about 10% off the top.
Right.
And they were also looking at these sentiment gauges. They were looking at investor sentiment gauges, and they were saying, wow, there's a lot of bearishness out there. To them, there was a potentially bullish contrarian indicator. What do you make of that?
Yeah, it's funny with the sentiment indicators because even retail sale, you know, the U of M survey of consumers, and then you had the Conference Board's survey of consumer confidence. Both of those have been plummeting, right? It's like a very dark, scary story. But then when you look at retail sales, consumer spending, sure, a little lighter, but not dropping by the same amount. Consumers are inflation resistant. We've seen that, right? They'll continue to spend even as prices get higher. The one thing you have to look at with the consumer is how secure do they feel in their job, in their ability to keep their job, or if they were to lose it, how long would it take them to get another one? We know consumer spending is 2/3 of GDP, so we really need the U.S. consumer to continue to be out there spending, and for the most part they do, which is why the U.S. has, you know, such a great economy. But in this scenario, we get jobs data on Friday. That's really the one thing I'm going to be looking at, because as you point out, we've seen this dichotomy between sentiment, but then what people are actually doing. And I agree with the strategist you're referring to, where the base case for the markets and for the economy hasn't really changed entirely. Even for some of these tech names, you know, they're still looking for pretty high profits when we get to earnings season next week. So the base case hasn't entirely changed, but it is the uncertainty, and that's why you're seeing investors react to that. You're seeing consumers react to that because they don't quite know what's happening over the next 12 months.
To your point, big jobs report on deck. We're all waiting for it.